Tom Lee, the head of research at Fundstrat and a frequent CNBC guest, just dropped a big statement that caught my attention. He said, AI is still massively undervalued, and he backed it up by pointing to Oracle's huge surge after earnings, while also making the case that small-cap stocks could be the real winners when the Fed cuts rates in September. In today's video, I'm going to show you the clip of Tom Lee's interview on CNBC, then I'll give you my full reaction and breakdown of what he said. After that, I'll share my own in-depth analysis of the 3 smartest AI stocks to buy right now. Stocks that I believe could really benefit from the trends Tom Lee is highlighting. If you only watch one investing video today, make sure it's this one. And stay with me all the way to the end because you don't want to miss these picks. Do me a favor, hit that like button. Let's get this video to 1,000 likes. Share it with a friend who's into investing and drop your thoughts in the comments below. And of course, don't forget to subscribe so you don't miss the next big financial update. Alright, let's dive in. Here's what Tom Lee had to say.
Just really quickly, Tom, what do you make of the pullback in futures? Again, all 3 indices hit record highs. It's a very slight pullback, but what do you think the catalyst is for the pullback this morning?
Well, I think it's normal to expect some profit taking. I mean, we just made all-time highs and, it is the weekend. But to me, we know that since April 2025, any of these pullbacks have been really shallow. And, next week, we know that there's something very important to watch. And I'm sure a lot of people are going to be hesitant, but we know that ultimately it's a good thing when the Fed cuts.
We have a lot of people in general that are concerned about over-concentration in the market. Ironically enough, we had a guest on earlier, 𝗗𝗜𝗦𝗗𝗃 from New York Life, that was saying that concentration was a good thing. But the valuation of this market's been a concern for a lot of people. But your word of the day is undervalued. What's undervalued right now?
Frank, I think Oracle surging 41% after they report earnings tells me that AI is an undervalued sector, because how else do you explain a stock that is as large as Oracle gaining as much as it is unless it shows investors are really underestimating the future growth of AI?
Just to be clear, what's undervalued? Are we talking about the chip sector? Are we talking about software? Are we talking about the hyperscalers? Are we talking about the Mag 7? Or is it everything in your mind?
Well, I wouldn't want to be too specific because, AI is still a 5 or 10 year story. And so I wouldn't want to be trying to drill this down into a really narrow set. I think AI as a theme is continually underestimated because I think a lot of people think this is money being spent without return. Oracle is showing you that there's a lot of future growth.
So with that in mind, Tom, your pick for us today is the IWM ETF, a small cap ETF. If AI is undervalued, why aren't you saying your pick for us today is a Palantir, an Oracle, a Vistra that helps power some of these data centers? Why are you going to the small caps?
Well, a couple of reasons. First of all, Frank, it's because exactly as I said, I wouldn't want to try to pick a slice of AI to talk about being undervalued. But if we think AI is undervalued, what's even more undervalued is small caps, because that's been held at bay because the Fed has not been cutting rates. Fed's been on hold all year. And for the first time since last year, the Fed is cutting in September. A September cut after a pause has only happened in 1998 and 2024. And both times were good periods for small cap stocks.
So a question to you, though. The same weakness in the economy and the job market that's leading the Fed to cut, doesn't that directly impact small caps?
Well, I think that we want to not be oversimplistic in thinking about this. Number one, what is the Fed going to try to accomplish by cutting, especially if they're worried about the employment market weakening? They want to get the ISM to actually go back above 50. They want corporates to start hiring. They want businesses to be confident. So this rate cut is not just a symbolic cutting of interest rates for mortgages. It is really an attempt by the Fed to get the economy to grow again, to actually increase the job market. That's really bullish for small caps.
Tom Lee starts off by addressing the small pullback we've seen in futures. Remember, the market just hit record highs. So, naturally, some investors are locking in profits before the weekend. He emphasizes this isn't anything alarming, it's just normal market behavior. Since April 2025, every pullback has been shallow, meaning buyers have been quick to step in. The bigger reason for hesitation right now is the Fed. Next week's Fed action is looming and traders hate uncertainty. But in Tom's view, rate cuts by the Fed are ultimately bullish, not bearish. Frank, the interviewer, raises a concern that many people share. Is the market too concentrated in just a few big tech names? Some see that as dangerous, but Tom flips the narrative. His word of the day is undervalued. He points to Oracle's stock soaring 41% after earnings as proof that investors are still underestimating the growth potential of artificial intelligence. To him, the big rally in Oracle isn't random. It's the market waking up to just how transformative AI is going to be over the next decade. Now, he's careful here. He doesn't want to overspecify by saying only chips or only hyperscalers or only Mag 7 stocks are undervalued. His point is broader. The entire AI theme is misunderstood. Many skeptics think AI spending is a waste with no return, but Oracle's numbers show the opposite. AI is already creating real measurable growth. Then comes the surprise. You'd expect Tom Lee to double down on AI stocks like Palantir or Oracle or data center plays like Vistra. Instead, his pick is the IWM ETF, which tracks U.S. small caps. Why? He argues that small caps are even more undervalued than AI. Here's his reasoning. Small caps have been stuck because the Fed has kept rates high. When borrowing costs are elevated, small companies get squeezed harder than large caps, but the Fed is about to cut rates for the first time since last year, and history shows that when the Fed cuts after a pause, like in 1998 and 2024, small caps tend to outperform. For Tom, that's a rare setup you don't want to ignore. Frank challenges him. If the Fed is cutting because the economy and job market are weakening, wouldn't that hurt small caps even more? Tom says we shouldn't oversimplify. The Fed's goal with a cut isn't just to lower mortgage rates, it's to reignite business confidence. They want the ISM, which measures manufacturing activity, to climb back above 50. They want companies to hire again and start investing. So in Tom's view, the Fed's cut is proactive. It's meant to prevent weakness from spiraling into a recession. That environment, historically, has been very favorable for small caps. So to sum it up, Tom Lee's message is that while AI is still massively undervalued, the real asymmetric opportunity right now might be small caps. Oracle's earnings are a wake-up call that AI isn't hype, it's growth. But small caps are the bigger sleeper play because the Fed's shift in policy could finally unlock their potential. It's a reminder that while headlines scream about big tech, opportunities often lie in the overlooked parts of the market. Tom is essentially telling us to think 2 steps ahead. Don't just chase what's hot, position where the next wave of capital could flow. So that's my breakdown of Tom Lee's CNBC interview. He sees AI as undervalued, but small caps as the most mispriced opportunity heading into a Fed cutting cycle. The big question for all of us, do we believe history will repeat itself and small caps will rally like in 1998 and 2024? Or will this time be different? What do you think? Let me know in the comments whether you're leaning toward AI giants, small caps, or a mix of both. This video is sponsored by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. Alright, let's get down to business and dive into the 2 smartest AI stocks to buy now. The first company I'm pounding the table on is a name that every gamer knows but most investors are tragically overlooking. I'm talking about Unity Software, ticker symbol U. You might think of Unity as just a video game company, and you'd be partly right, but you'd be missing the colossal picture. Unity is the world's leading platform for creating and operating interactive, real-time, 3D content. Think of it as the digital canvas for the metaverse, virtual reality experiences, augmented reality apps, and a massive chunk of the video games across the globe. Unity's core business is its powerful game engine. Developers build immersive worlds that can run on virtually any device, smartphone, high-end gaming PC, VR headset. This is not a niche product. Over half of all mobile games, over half of all PC games, over half of all console games. That's market dominance. Same tech that makes dragon-slaying games is used to create digital twins of factories, design cars in virtual space, train surgical robots. Unity is becoming the essential OS for the 3D digital world. The company makes money 2 main ways. First, create solutions. Subscription fees for creators. Reliable recurring revenue Wall Street loves. Second, grow solutions. The real growth engine. Helps developers monetize via advertising services, in-app purchases, operational tools. More successful games and apps equals more revenue for Unity. A symbiotic relationship. Why is this a home run for 2025? The world is moving from flat 2D to immersive 3D experiences. Every major company, automotive, architecture, aerospace, needs to build and simulate in 3D to stay competitive. Which platform is easiest, most versatile, and has the largest developer community? Unity. The stock has been beaten down, but the business sits at the epicenter of a massive tech shift. an opportunity to buy the leader at a discount. Now let's connect the dots to the AI revolution. This is where the Unity story goes from great to absolutely spectacular. The interactive 3D worlds built with Unity are becoming the ultimate training grounds for artificial intelligence. Think about it. How do you teach an AI to drive a car? You can do it in the real world, expensive, dangerous, slow, or run millions of miles of simulations inside a hyper-realistic digital world built with Unity, weather condition, traffic scenario, pedestrian behavior in a fraction of the time and cost. Unity is a leader in synthetic data generation. Its platform creates vast, perfectly labeled data sets to train machine learning models. This is a game changer. Getting high-quality labeled data is one of the biggest bottlenecks in AI development. Unity solves this by letting AI learn in a perfectly controlled, infinitely variable digital sandbox. This isn't a future state dream, it's happening right now. Companies in robotics, autonomous vehicles, computer vision are flocking to Unity to accelerate R&D. Unity is embedding AI into its creation tools to make developers more powerful and efficient. Imagine an artist describing a fantasy creature and an AI instantly generating a 3D model, or a programmer building complex game logic with natural language. Muse, Centis, are making this a reality. This democratizes content creation, allowing smaller teams, individual creators to build experiences once only possible for massive studios. This expands Unity's total addressable market exponentially. The synergy here is undeniable. The more industries adopt real-time 3D, the more data is created. The more data that is created, the more powerful the AI models become. And the more powerful the AI models become, the more demand there is for Unity's simulation environments and AI-enhanced creation tools. It's a virtuous cycle of growth that places Unity at the heart of the AI industrial complex. This isn't just a gaming company anymore, it's a foundational AI infrastructure play hiding in plain sight. So, the technology is revolutionary. But what about the stock? Unity Software has had a rough ride. The stock is down significantly from its all-time highs, and that has scared a lot of people away. But fear on Wall Street is an opportunity for savvy investors like us. The market has been punishing Unity for management missteps and concerns about its monetization strategy. But here's the thing, new seasoned leadership is in place, and they are laser-focused on profitability and streamlining the business. They're cutting the fat, refocusing on creation, refocusing on AI. The market is a forward-looking machine, but right now, it's kind of driving by looking in the rearview mirror. It's seeing the past struggles and ignoring the massive future ahead. The digital twins market alone is projected to grow into a multi-hundred-billion-dollar industry. Industrial metaverse, autonomous systems training, Arkansas applications, VR applications, these are tidal waves of change. Unity is the primary pick-and-shovel provider for all of them. Unity Software currently holds a market cap of about $18.4 billion, generating $1.8 billion in revenue in 2024. However, the company is still struggling on the profitability front, reporting a net loss of roughly $755 million. Investors are keeping a close eye on Unity because while its software has become a key player in gaming and real-time 3D content, the path to sustainable profits remains uncertain. Buying Unity today is like buying Adobe in the early days of digital media or Autodesk before every architect used CAD software. The potential for a multi-bagger return is absolutely on the table. What makes me so confident for 2025 specifically? Because this is the year the turnaround story becomes undeniable. We're going to see the company achieve sustained profitability. We're going to see major partnership announcements with industrial giants standardizing on Unity. We're going to see AI-powered tools gain massive adoption, driving subscription growth. The narrative will shift from a troubled gaming company to a diversified AI and simulation leader. When that happens, institutional money will flood back in, and you'll wish you had bought more. Don't let short-term noise distract you from the long-term signal. The world is becoming more digital, more interactive, more intelligent. Unity provides the fundamental building blocks for that world. The stock has been left for dead, creating a valuation that is completely disconnected from its long-term potential. This is a classic case of market irrationality. For investors with a little bit of patience and a lot of vision, Unity Software is a coiled spring, ready to rocket higher. This is your chance to get ahead of the crowd. Now for our second titan. This one is no secret, but the market is still fundamentally misunderstanding the scale of its AI dominance. King of commerce, emperor of cloud, the one and only Amazon, ticker symbol AMZN. Everybody knows Amazon. You probably have a package from them on your doorstep right now. Heck, you might even be watching this on a device running on their cloud servers. But what you might not appreciate is that AI is not just a feature at Amazon. It is the central nervous system of the entire company. It's the invisible force that powers every single part of its massive, globe-spanning empire. From the moment you land on Amazon.com, AI is at work. The product recommendations that seem to read your mind, analyzing your browsing history, analyzing your past purchases, analyzing the behavior of millions of other shoppers. The pricing, which can change from minute to minute, AI. The way products are sorted and ranked in search results, also AI. This isn't just about selling you more stuff, it's about creating a frictionless, personalized shopping experience that keeps you coming back. This AI-driven flywheel is a key reason for Amazon's retail dominance. But the retail side is just the tip of the iceberg. The real AI story lies in its logistics and operations. How does Amazon promise and deliver packages in 2 days, 1 day, or even just a few hours? It's a symphony of artificial intelligence. AI models predict demand in every single zip code, telling Amazon which products to stock in which fulfillment centers. Inside those centers, robots guided by AI navigate the floors to pick and pack orders. The delivery routes for its fleet of vans are optimized by AI in real time to account for traffic, weather, delivery density. This operational excellence, driven by AI, creates a competitive moat that is nearly impossible for rivals to cross. Think about the sheer scale of this for a second. Amazon processes billions of transactions, manages hundreds of millions of products, orchestrates a logistics network that rivals the world's largest shipping companies. Doing this efficiently is an AI problem of unimaginable complexity. Amazon has been investing billions of dollars for over a decade to solve these problems, and its lead is, honestly, formidable. While other companies are just now appointing a head of AI, Amazon has entire armies of PhDs in machine learning deeply embedded in every division. It's not playing catch-up, it's setting the pace. Amazon's AI dominance isn't just one-dimensional, it's a powerful three-pronged attack that I call the AI trifecta. The first and most important is Amazon Web Services, AWS. AWS is the undisputed king of cloud computing, and it's the primary platform where the AI revolution is being built. Thousands of startups and enterprises are building on AWS. Amazon provides the raw computing power, Trainium, Inferentia, Bedrock, and the machine learning tools that developers need. Amazon is not just an AI company, it's the arms dealer for the entire AI army. The second prong is its massive e-commerce and logistics network. This isn't just a user of AI, it's a massive data factory. Every click, every search, every purchase, every delivery creates a torrent of data that Amazon uses to make its AI models smarter. This creates a feedback loop that no other company can match. The better its retail AI gets, the more people shop on Amazon. The more people shop, the more data it collects. The more data it collects, the better its AI gets. This flywheel spins faster and faster, crushing the competition in its wake. The third prong of the trifecta is its ambient computing division, centered around Alexa and Echo devices. Some have been skeptical of Alexa's profitability, but they are missing the strategic importance. Alexa places Amazon's AI directly into millions of homes, cars, and offices. It is a powerful data-gathering tool for understanding consumer intent and behavior in the real world. As generative AI makes these voice assistants exponentially more capable and conversational, Alexa is positioned to become the primary interface through which we interact with technology, order products, and manage our smart homes, all within Amazon's ecosystem. When you look at these three pillars together, the foundational platform of AWS, the data-generating machine of its retail empire, and the ambient presence of Alexa, you see a company that is attacking the AI opportunity from every conceivable angle. It's a strategy of total domination. Amazon is not just participating in the AI revolution, it is powering it, benefiting from it, and shaping its future direction. This is not a stock you bet against, this is a stock you own for the long haul. So, with a market cap in the trillions, can Amazon really make you rich from here? The answer is an unequivocal yes. Don't be fooled by the law of large numbers. The AI market is set to add trillions of dollars to the global economy. Amazon is positioned to capture a disproportionate share of that value. The growth story is far from over, it's getting a second wind. The market has been focused on advertising and retail margins, but real explosive growth will come from AWS and generative AI. Think about Amazon Bedrock, a service that gives companies easy access to leading foundation models. It's a masterstroke. Instead of building one model, Amazon built a marketplace for models, making itself indispensable no matter which model wins. It's a toll road on the AI superhighway. Every company is scrambling to integrate generative AI, and many will be paying Amazon for the privilege. This growth driver is still underestimated. Now valuation. Amazon dominates cloud computing, e-commerce, and artificial intelligence. Its stock often trades at a reasonable valuation, especially when you look at its cash flow. CEO Andy Jassy is a disciplined AWS operator focused on efficiency and profitability. As pandemic-era costs recede and high-margin AWS AI services accelerate, expect massive expansion in free cash flow. Amazon sits in an entirely different league with a massive market cap of $2.43 trillion. The company delivered earnings per share of $6.57, with a price-to-earnings ratio of 34.73. For 2024, Amazon brought in $637.96 billion in revenue and netted an impressive $68.59 billion in profit. These numbers not only show Amazon's dominance across e-commerce, cloud services, and digital advertising, but also underline the stability and profitability gap when compared to a high-growth, still unprofitable company like Unity. Looking to 2025 and beyond, Amazon is a fortress. It has an impenetrable moat in e-commerce and logistics, a cash-gushing AWS at the AI forefront, and a strategic position in the connected home with Alexa. It keeps investing. Amazon Pharmacy and Healthcare, Project Kuiper and Satellite Internet. This isn't a slow giant, it's nimble and innovative, with many levers for decades of growth. Owning Amazon is a bet on the future of the digital economy. As we wrap up, I want to bring it back to the most important tool you have: your knowledge. Knowing which stocks to buy is only half the battle. Knowing why you're buying them, when to hold, when to sell, is what separates the amateurs from the pros. That's why I want to remind you about the Value Stocks Investing Master Course. This program is your key to unlocking time-tested investing strategies. It's not about charts and squiggly lines, it's about deep, fundamental business analysis. The course is packed with practical lessons you can apply immediately. You'll learn to dissect a company's financial statements, spot a durable competitive advantage, a moat, and calculate a company's intrinsic value, so you always buy with a margin of safety. These aren't just theories, they're real, actionable strategies inspired by investing legends. The course gives you the framework to build a portfolio that can weather any storm and generate incredible long-term returns. Imagine feeling absolute confidence every time you invest because you've done the homework. You understand the business, you know its value, and you're not swayed by daily market mood swings. That's the power this course gives you. It teaches you to think like a business owner, not a stock market gambler. Lessons are clear and engaging. Even complex topics become easy to understand. This is the education Wall Street doesn't want you to have. Your financial independence is too important to leave to chance. Take control of your investing journey today. Enroll in the Value Stocks Investing Master Course. Start building skills that will serve you for a lifetime. Stop following the herd, start leading the pack. Invest in your education, the returns will be priceless. Click the link now to get started. You owe it to your future self. There you have it, folks. Two absolute powerhouses. Unity Software, Unity, the architect of three-dimensional worlds where AI will learn and grow. Available at a stunning discount. Amazon, the undisputed titan with an AI-powered nervous system across the digital economy. These are opportunities that can define a portfolio, but knowing is just the first step. Next, take action and stay informed. The market moves fast. You need an edge. That's why I want to personally invite you to join our exclusive community on StocksGalore Patreon. As a Patreon member, a whole new level of insight. Exclusive deep dive analyses on stocks that aren't public yet. A private Discord community where you can ask questions and connect with other serious investors. It's the ultimate tool for anyone truly committed to building wealth. Being part of the Patreon family, you're in the inner circle. You'll get my unfiltered thoughts on market moves. If you're serious about making money and turning investing into a core part of your wealth building strategy, then joining our Patreon is the single best next step. Click the link in the description. Now, I want to hear from you. Question: beyond stock price, how do you measure the long-term value of a company's investment in artificial intelligence? Drop your thoughts in the comments below. I read every single one. Smash that like button. Share this essay with a friend who needs to see it. Make sure you are subscribed to this channel for more winning ideas. Let's go out there and make some money. Booyah!